Deep in the Pacific, a subtle shift in water temperature is setting off a chain reaction, and its final target is your wallet. The story actually surfaces here at the Reserve Bank of India in Mumbai. Every 2 months, their Monetary Policy Committee meets to dictate the financial rhythm of the country. In their latest review, the committee reached a unanimous decision. The benchmark repo rate, the baseline rate at which the central bank lends money, would remain locked exactly where it is at 5.25%. On paper, the domestic economy looks highly resilient. Banking system liquidity sits comfortably above 1 lakh crore, and the numbers are strong enough that the RBI just pushed their official GDP growth estimate up to 6.7% for the year. Yet, wrapped inside this optimistic report is a stark warning. The RBI governor highlighted a severe incoming threat aimed directly at Indian agriculture, which raises an obvious question. Why is the nation's central bank suddenly so concerned with meteorological data from the middle of the ocean? Because our modern financial system is incredibly sensitive to ecological shifts. When domestic economic stability relies on the weather, central bankers have no choice but to study the climate. The alarm was officially sounded by the World Meteorological Organization. Their data confirms that the Pacific Ocean is rapidly warming. This map visualizes the El Nino phenomenon. A massive band of elevated heat stretches across the Pacific, disrupting established atmospheric patterns. That trapped thermal energy acts like an atmospheric roadblock thousands of miles away, actively weakening rain systems moving towards South Asia. For India, the stakes are absolute. With a strong El Nino projected, the meteorological department expects below average rainfall. Those vital flooded fields quickly become fractured, arid dirt. A few degrees of heat off the coast of South America literally dictates whether the half of the Indian population dependent on agriculture will survive the season. Without steady rain, sowing drops and germination stalls. The immediate result is a severe deficit in critical kharif crops rice, soybeans, and pulses. That rural deficit doesn't stay in the fields, it moves immediately into urban markets, where sudden scarcity rapidly drives up the price of basic staples. This flowchart tracks how food inflation spreads. Rising ingredient costs force restaurants to hike prices. As daily expenses climb, workers require higher wages to survive. That pushes up payrolls, which then inflates transport and manufacturing costs across the board. What starts as a lack of rain in the countryside mutates into an economic virus, infecting every single layer of the domestic supply chain. The RBI's mandate requires keeping inflation safely locked at a 4% target with a maximum ceiling of 6%. If El Nino drives inflation past that ceiling for 3 consecutive quarters, the central bank must step in and cool the economy by hiking the repo rate. For consumers, that means the cost of borrowing instantly jumps. The EMI on your home loan, the financing for a new car, and the capital required to run a small business all become painfully expensive. That defensive rate hike would throttle borrowing and investment, driving the country's celebrated 6.7% GDP growth, potentially stopping urban development in its tracks. However, the RBI has kept rates steady at 5.25% because they aren't hitting the panic button just yet. The Indian government has spent the last decade building a structural defense against this exact scenario. The first pillar of that defense sits inside these massive silos. The Food Corporation of India maintains extensive buffer stocks ready to be flooded into the market to artificially stabilize prices if the harvest fails. The second pillar is infrastructure. Over the past 10 years, irrigation networks have significantly expanded, providing a lifeline of water to keep fields green even when the monsoon doesn't deliver. We are looking at a high stakes collision between an unavoidable global weather anomaly and a meticulously constructed national defense system. The economic data over the next quarter will answer the ultimate question. Are those buffer stocks deep enough to absorb the El Nino shock? Or are we inevitably heading toward punishing interest rates and a brutal cost of living crisis?